Shifting focus to our big news maker, India's retail inflation touched 7% in August, up from 6.7% in July. This was fueled by a 7.62% pickup in food prices as industrial production growth in July dropped to the lowest level since April at just 2.4%. This is the 8th successive month that retail inflation has stayed above the central bank's upper threshold of 6% and constitutes a setback to the spending power of households. Rural inflation, which was at 6.8% in July, saw a sharper rise than urban inflation in August, rising to 7.15%. Urban inflation moved up from 6.49% in July to 6.72% in August. The combination of inflation and a tripping industrial recovery has prompted economists to expect a fresh interest rate hike during the monetary policy review at the end of this month. But the Indian equity market looked up past the higher consumer price inflation data and surged for the fourth straight session, with analysts expecting the rally to continue, driven by foreign investors. At the open, the BSE Sensex hit a high of 60,551 points, while the Nifty 50 touched the 18,000 mark for the first time since April. Let's decode the inflation numbers and what does it mean for the household budget. Joining me on the show is our big news maker, Sanjeev Sanyal. He's the member of Economic Advisory Council of the Prime Minister. Mr. Sanyal, really appreciate your time. India's August retail inflation rises to 7%. It is higher than July's brief respite, what was seen as 6.7%. But it remained above the Reserve Bank of India tolerance band of 2.2 to 6% for the 8th consecutive month. How worried is the government and what is the intervention that is being looked into?
First of all, Marya, thank you very much for having me on your show. First of all, do remember that the international context in which this is happening, where international oil prices have been consistently high now for several months. Although they have come down a little bit from the peak, they are still running at over $90 per barrel. That is feeding through to domestic everywhere around the world. This includes India, of course, because we do import the bulk of our energy requirements. So consequently, we are not immune to this. And it is filtering through to food prices and other prices as well. So with that context, do remember that, yes, inflation has been an issue that we do take very seriously. Inflation indeed is running above the 2 to 6% range that the Monetary Policy Committee has been given to target. So it is something that the Monetary Policy Committee will indeed take into account when it does next monetary policy evaluation. As far as the government is concerned, certainly there are certain inputs that the government will consider, whether it's in terms of how we think about food stocks, for example, and there are, as you know, concerns about the upcoming crops because of rain variations across the country. So we will be managing this very actively. However, in a world where, you know, even in developed countries, double-digit inflation is, almost every developed country is seeing double-digit inflation, and in emerging markets like and others, you are seeing inflation in the 60, 70, 80% range. With that background, I think India has managed to do rather well, and there is no major domestic supply-side driven inflation that we can yet see.
Mr. Sanyal, the food prices is something that impacts the household budgets. And also you have highlighted that there has been an uneven monsoon which could keep the food prices high. The statement that came from the ministry was about adverse base effect. For a common man, explain how worried should he or she be, and when will the household budget stabilize? Is it happening in the next few weeks, or we have to wait a little longer?
I think the ordinary consumer will have to take into account, one, there is a external impact of oil prices that frankly we can do limited things about. But as far as the overall macroeconomic stability is concerned, the government is very concerned about it. And as you would have seen throughout the COVID shock period, we are a government that takes macroeconomic stability very, very seriously. And so in that, with that background and context, I would say that sure, there may be some ups and downs as far as food prices is concerned, but they will be managed. We do have more than adequate food reserves in the country. So even though there are these shocks that may have from external shocks and also uneven uneven rainfall at home, I think we have the capacity to more than manage this, even if occasionally the inflation rate may be somewhat higher than we may like. I think given the global context, we are doing more than well.
Is there any respite in sight? Let me ask that question again. The reason why I'm asking you is high inflation is coupled with low IIP numbers. What does it mean for the economy overall?
Personally, I'm not very concerned about the low IIP number. Everybody is aware that the IIP that India uses is now well outdated and needs to be updated. It is a same factory indicator in an economy where not just the overall economy, but even the manufacturing sector has completely reoriented itself, and this is not being captured by the IIP. My own sense is that there is more than adequate momentum in the economy. The services sector, of course, is booming, but even the manufacturing sector is doing well enough, and that is not being captured. For example, we are doing well in certain areas like electronics, and that doesn't get captured at all in this, what is called the same factory approach to IIPs. So I think this is really a case of changing the IIP than anything else. You will get a much better sense of the momentum in the manufacturing sector, looking things like PMI or looking at even the P numbers or G numbers which come out, which are done on a much bigger pool using the Ministry of Corporate Affairs database, which is a much, much bigger database. So I am not too concerned about the growth momentum at all, but macroeconomic stability is something that we keep a hawk's eye on. And that, as I said, although we have managed way better than pretty much any other country in the world, we are concerned about this, and we will remain concerned about it and will actively manage it.
The centre had prohibited exports of food products such as wheat, rice and maida to curb price rise, but no visible impact has been felt.
Now, of course, this is something you actively manage. This is not some grand plan about how to manage prices. There are weather-related variations. And by the way, those weather-related variations are not just in India. Do remember that China is facing a major drought and therefore will be importing rice. There have been all kinds of disruptions in Europe from drought, not just the war. So in that context, we need to manage not only domestic supplies, but do take into account the fact that pressures on food prices may vary even externally and therefore have a blowback into our markets. We do, after all, export significant amounts of food to the rest of the world. This is not to suggest that we should completely ban it, but we do need to actively manage it. And that is precisely what we are doing.
The inflation numbers in rural parts of India is higher than the urban centers. What explains this?
So again, as I said, there may be variations across the country, including in rural areas. As I said, food prices have variations as well. But we also have seen in certain parts of the food market very recently prices crash. I have seen, for example, tomato and garlic prices in just the last few weeks come down sharply, and farmers being annoyed about this as well. So this is something that has to be actively managed. And there is no sort of one button that we need to press in order to solve it. Having said that, overall food stocks remain comfortable given the context of disruptions globally. Inflation in India is still very well managed. The Reserve Bank of India and the Monetary Policy Committee are more than capable of managing whatever pressures may come, because overall growth momentum is strong. The banks are in a very good shape. And so if necessary, if they do tighten a little bit more, the system in general can more than take it.
The inflation is skyrocketing, as I've been saying, and tripping industrial recovery. Will all this mean another rate hike by RBI in its month-end policy?
Well, I can't comment for the Monetary Policy Committee. That is for them to take decisions. As I said, I actually disagree with you that the momentum in the growth is slowing very sharply. There is good growth momentum in the economy at multiple levels. So I am not too concerned about specifically what the IIP is showing at all. But as I keep mentioning to you, and I said that before, we have our macroeconomic indicators are good nick, and we are more than capable of retaining inflation within the band in the not too distant future. Particularly since, as you can see, oil prices globally have begun to come off. Now, of course, I'm not in the business of predicting oil prices, but I'm just saying that oil prices are now coming off. And internal domestic supply side conditions remain in very good shape. If anything, we probably have the best supply side conditions we have had in a long time, and perhaps the best there is in the world. So given that, I think there are no real reason for being concerned on the macroeconomic stability front or on the GDP growth front.
Mr. Sanyal, will the gas crisis in Europe mean that the inflationary trend will continue? Because there is an SBI research report that says that the worst is yet to come globally.
Well, I'm not in the business of predicting how Russia will behave over the winter. All I can say, if there is a disruption, that disrupts everywhere around the world. Obviously, it causes stress in Europe itself, which is an export market for us. And anyway, disruptions in the world cause problems. Imports back into India also get affected. So any supply side disruptions anywhere on the planet in a interlinked world has an impact, and we will deal with it as it goes. But I have no way of predicting exactly how Russia will or will not supply gas into the future. It is something that we have to keep an eye on, and build bulwarks where we can, stock up on inputs where we can, and so on. But it is something that we will retain some concern about.
My last question to you. What explains this trend that the US dollar is going up with respect to every other currency, including the Indian rupee?
Well, the US and printed a large amount of dollars through the COVID crisis, something that I had myself expressed some concern about at that time. And they are trying to unwind it. So when they unwind it, they tighten the supply of dollars, and dollar spikes up. And as you will be aware, they also have a serious inflation problem, some of the highest inflation in over a generation. So consequently, they are tightening, and the dollar is consequently strengthening against everybody, including the rupee. But let me point out here that the rupee is actually appreciating against everybody other than the dollar. We have appreciated against the yen, the euro, the British pound, and I am of the opinion that we should not be targeting a nominal level against the US dollar. If we do that, we will be unnecessarily stressing our export sector and creating a target for speculators. So I agree with the RBI's policy of allowing the rupee to find its own level while using the foreign exchange reserves to sort of rein in volatility. So it doesn't allow the rupee to move too fast in any direction, but by and large allows it to find its own level. I think they have done it successfully, and I would support them continuing to do this.
Sanjeev Sanyal, really appreciate your time. Thank you so much for being a newsmaker on News Epicenter and explaining the inflation numbers for our viewers. We are slipping into a short break. After that, there's some breaking news that is coming in from Bihar.